India's growth is on steady path of recovery. However, the growth has been K-shaped. Formal sector and top of the pyramid segment has done quite well in recovering from the pandemic-related downturn. However, the informal sector as well as the bottom of the pyramid segment has not recovered quite well and still on the path of recovery. Capex is being driven by the government. While there are enabling conditions for private capex to pick up, like healthy balance sheets of corporates, well capitalized banks, and capacity utilization going up, it is yet to start firing up. Private consumption, which has been the mainstay of India's growth, is under pressure, mainly because of the scarring of household balance sheets and the exhaustion of pent up demand. However, government consumption in FY24 is expected to remain strong because there will be no subsidy related spending, and that will open up some space for government to spend elsewhere. Exports are expected to be sluggish due to the weak global growth outlook. Overall, the growth outlook is mixed. Some segments are doing really well, while some are still recovering. We expect FY23 growth to be 6.75% and FY24 growth to be 5.75%. The downtick in growth is mainly due to the base effect. RBI's hikes have resulted in operative rates moving higher from 3.35 to 6.25%. We think RBI is very close to ending the rate hike cycle. In our view, RBI will do one last 25 basis points rate hike in Feb policy and will stop with terminal rate being at 6.50%. RBI's focus will be to manage liquidity this year so that the credit flow can continue at a healthy pace. Liquidity is right now at neutral levels and is expected to go into deficit mode by the mid of CY23. It will be interesting to see how RBI manages the liquidity at that point. We believe RBI will have to do liquidity injecting operations while the liquidity goes into deficit so that the credit flow continues in a healthy way. As a result of RBI hikes and liquidity tightening, yield curve has moved up significantly. Short end has moved up by more than 300 basis points and long end has moved up by about 150 basis points. Because of this, the yield curve right now is at long-term averages or at higher than the long-term averages. Thereby, the levels have become attractive and fixed income has become an attractive class to make investments now. In terms of portfolio recommendations, people with investment horizon of up to 3 months should look at savings funds and a money market fund. With investment horizon of 3 months to 6 months should look at low duration fund. With investment horizon of 1 year plus should look at short term funds, and people with investment horizon of 3 year plus should look at dynamic bond funds. In addition, people should also make allocation to the target maturity fund based on their investment horizon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।